Hey traders, welcome back to the channel. Today, we're diving into a powerful trade breakdown using the Liquidity Inducement Framework, one of the most effective methods to catch smart money moves in the market. This breakdown will help you refine your entry precision and understand where the real liquidity lies. Let's jump into the charts. All right, first things first. We begin by identifying the most recent break of structure on the chart. This helps us understand where the market has shifted direction. Next, we notice a liquidity inducement zone. This is where price tricks early buyers or sellers into entering too soon. After this inducement, price makes a new high, confirming the trap and giving us our main point of interest. Just above this point of interest, we spot a smart money trap. This is an area where retail traders get baited into long positions, but institutions are actually preparing for the opposite move. We zoom out and notice equal highs forming. That's a clear liquidity target for smart money. Even higher, we spot trendline liquidity forming. Perfect bait for breakout traders. We now expect the market to sweep above the trap, take out those eager buyers, and then reverse. Once those buyers are liquidated, price retraces into our inducement zone. That's our moment to strike. We enter long from the zone with a risk to reward of 1 to 7. Clean setup, high probability, smart execution. That's how we break down a smart money move using liquidity layers and inducement. But we're not stopping here. In part 2, I'll show you how to combine this setup with entry models to get an even tighter entry and push for RRs of 1 to 10 or more. So make sure to like, subscribe, and turn on the bell icon so you don't miss the next upload. Check out the playlist on entry models. It'll be live soon. Until then, keep mastering the charts and stay smart with your trades. Catch you in the next one. Peace.